Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look again in the gold market. So in the weekend we have prepared interesting analysis on the technical side of the gold market, and we have found that actually the market has two contradictory patterns. One of them stands on the monthly chart. That's our initial pattern that we have considered 2 weeks ago, but in recent week, due to the sell-off that has followed in a reaction on the non-farm payrolls release, market has formed a bearish weekly grabber that suggests the drop below the 1760 lows. But the tricky moment stands around these lows because these lows actually invalidation point for a monthly pattern. So it means that one of the patterns has to fail. So either the bullish on the monthly or the bearish on the weekly. And we do not know yet what particular will happen, but in the weekend we said that currently we have the unique situation when all the price action that we would like to get on the market has been completed, because theoretically we have considered this head and shoulders. We said we would like to drop back to the somewhere to the 1850 area, where the right arm should stand at the head and shoulders, and here we particularly consider taking the long position. Although everything has been done, but the way how this has happened, the strength of this drop is not good for a bullish reversal pattern. So when you see with this bullish reversal pattern in the final stage of this pattern, you could see this miserable plunge. This is not a good sign, and that's why we said that although the pattern still stands valid and we do not see yet the signs of the failure, we have to be careful and take position only if we will get something bullish around this area. So this is crucial moment, crucial area for the pattern, significant support. And take a look at the yearly pivot points, 10, 13 or 7. It's also important. So if market indeed stands bullish and keeps some bullish ambitions, it has to turn up right from this area. Otherwise, we should be ready for a collapse and the erase of the weekly bullish grabber and for a deeper retracement on the gold market. So this is kind of the last bullish outpost that we have on the market. That's why it's very important. This makes our life a bit easy because we do know where to place the stops. So in the current situation, this should be somewhere below this area. Although this the final invalidation point of the bearish grabber, but the inability of the market to form head and shoulders and failure to form the right arm, it's already will be the first sign of the weakness, and it's probably that should lead to erasing of the pattern. So the taking out of these lows in this case will be just a question of time. So what we have currently at this point, first of all, we have, as on the euro currency, we have Jordan Napoli bullish stretch pattern, because market hits the combination of the fib level 1838. And take a look, this is also daily oversold. It means that if even we will not get some reversal and upward continuation, but market could show some meaningful pullback here for some significant distance. And then we will see what will happen. Maybe some news will be released, maybe some other factor starts to work, but situation could change. Initially, right at this moment, we do know that this is some support and we have the bullish directional pattern by the Jordan Napoli. It means that if you would like to go short with the grabber, I suggest the taking out of the lows and raising failure of these head and shoulders, you need to wait a bit and consider some fib resistance levels that stands on this downside action, where you could think about taking the short position. Currently, it's not a good point for immediate selling of the gold market. So on the 5-hour time frame chart, we also see that this is agreement support at this level, because market has completed XOP right at this point. And guys, actually we have the double repo buy pattern, so you could consider this as a thrusting action. If even you exclude this part, you still have here 8 bars to the downside. With this minor white candle, we have closed above the 3x3. Here is an attempt to go lower. Market has failed to do this, and here we have closed below 3x3, second close. So this is a type of the price action that reminds me of double repo buy. It also suggests maybe not, if not a reversal in upward continuation, but it suggests some meaningful pullback. Usually double repos lead price back to the 50% of the thrust. So it means that we could reach 19 even area, somewhere in this level. So this is what we have on the forward chart. On the hourly, we could consider minor extensions. So take a look. Yes, the action, speaking about returning back to the topic of the patterns. So here you could recognize minor, very small hand and shoulders pattern. It's left shoulder, head, right shoulder. We have the ABC bottom. OP stands in agreement with the 1871 first resistance. XOP stands higher, so it's approximately 1891, 19 even, so that will be an area of the minimal double repo target, which also means that hand shoulders should be completed here. So for a bullish position taken, if you have missed the opportunity to go along with this pattern, you have actually the only option with this trade is to hope that market will show the reaction from this area to the downside. Maybe we'll retest this trend line or something of that sort. Some meaningful retracement here would happen. Why? Because this is agreement resistance, and actually this is a kind of the feature of the bread and butter trade. So this will be first 30% pullback, and as overall momentum stands strong, after this pullback, market could show deep retracement. It's also a chance to go short for those of you who consider taking the short position on the gold, because we do not know what will happen, whether this market will just take out of these lows, continue downward action, or it will show a deeper retracement. But at least here, from the 30% level, it's 1871, it could be some meaningful retracement down. That will let you to move stop to the break-even. If even you will become wrong, and so you will out on the break-even point. For others who consider taking the long position, if this pullback will happen, you could just watch for support areas, fib levels, where you could try to buy gold to this upward continuation. Ultimately, for the bears, it is important to see the market stay somewhere below this area, because if market will move higher and taken out of this top, it will totally erase the sell-off of the non-farm payrolls and will tell you that sentiment has been broken here, turning back to the bullish. So market should keep the normal behavior of the bearish market and stay below the major fib levels to keep the nature of the retracement here, to keep valid weekly bearish grabber. Moving above it, breaking 618 level, this will be the sign of weakness of the bearish scenario, and in this case it would be better to not take the short position. In this case, the advantage will turn back to the bullish pattern on the monthly chart. So that will be the next important level that we'll keep an eye on. Meantime, as I said, for the bulls, you could consider the pullback from this level, trying to take the position, watching for some fib support areas. For the bears, I do not know whether you will take position here or not, but maybe you could try to do this. Maybe it will work. Although, in general, we have the, as I said, double repo buy here on the forward time frame chart, not the bread and butter trade. So, invalidation point for short-term bullish scenario, as I said, stands below this area. So we'll see what will happen around this level. Maybe even we could use it as lows. So market should stay above these lows to keep the bullish ambitions, the upward continuation. So let's take a look how gold will play out this today.